or well, the market maker priced in like 75 points to the downside. We got about 47 of those. We did have an intraday low, much lower, near delta neutral. Brief test of that. We kind of rocketed back up during the FOMC meeting. Futures is mostly chopped down from like the earlier 61.10 test this morning. We got a test near 60.40. We might lose that overnight, given that we failed to regain 78 here. I would give me like a downside target around like 26, 25 for the overnight session. Obviously, earnings will play a big role there. We'll still have to see how those come in. Dollar moved up today. Definitely not the high of the day, but up pretty steadily, alongside yields, which moved up incrementally off of the deep drop that we saw on them yesterday. Not a lot of change here either. I mean, the Fed didn't do anything, so wouldn't expect much to happen. ES closing down 68 points, NQ 52, Dow 50, and Russell mostly unaffected. Commodities up a tiny bit. It looks mostly like agricultural, industrial metals. Some precious metals moved up. Energy down. Correlation moved down really hard today. Unfortunately, that didn't seem to do much. So a big push into the dispersion trade prior to earnings, which could be expected. Everyone wants to try to long the vol in the underlying before the big earnings because I mean, even as a sympathetic move, you can move into a lot of equities that would run alongside positive earnings breakouts without having to overpay for the volatility. The carry trade moved up a little bit today. Leverage closing the day out at 0.89, which is roughly where we closed yesterday. I guess a little bit higher. But leverage moved up pretty steadily on the 6 and 3 month today. We had a brief moment there where the forward yield of volatility turned positive. That was following the NVIDIA news regarding tighter import controls on exporting AI chips. Obviously, that recovered really hard into the Fed meeting. We ended up with the forward yield on volatility down to 2.53% at the end of the day. Bond vol moved down yesterday. Probably going to move down again today. Not a lot of exciting shit going on with bonds right now. Not until we get closer to probably like the employment and inflation data. Skew moved down yesterday. Might see it move down again today with the loss at 60.50. That's a major support. We definitely closed below it, and we closed a little bit below gamma neutral too. So there might be an increased demand for volatility in the overnight session as well. 74.55% of the S&P above its 20-day moving average, starting to fall off, but hasn't substantially. The correlation between VIX, cash VIX, dropping again today, down to 74.68. So still getting a lot of vol shorting. I think that was pretty obvious on the bounce in the intraday today. Fed funds futures priced out a little bit of the one rate cut they're pricing in for the year, and then it looks like the bear steepener came down a little. Although I think the intraday high was probably a little bit more significant prior to the Fed decision. Looks like it got up to about like 35.9, so 32.5 now. Again, still no inflation data and no change from the Fed policy, so we're probably not going to see a lot of moves there for a little bit. And then on the technical side of things, we retested the local, like the upside of the local downtrend, and bounced off of that. That's also the long, like one of the long-term trends right there. What the fuck goes back to? That might be like the 1929 one, but it scales weird on the daily. So just happenstance. But we still haven't retested the EMA 30 or the MA 50. This still isn't bearish yet. Not really. Probably need to substantially lose like 60.31 or drop below the EMA 30 and 50 to confirm anything to the downside. So I would say we're still in a pretty neutral positioning going into the earnings tonight. Tesla's down 5%. That's a good start. Yeah, so we're already pushing down for that 60.40 level on ES. EPS 73 cents, estimated 75. Fourth quarter revision 25.71 billion versus estimated 27.21. Who would have thought that a car company whose profit comes from selling cars would make less money selling fewer cars for less money in a high interest rate environment. Not me. I know. I know. I'm just saying crazy things. That's a significant breakdown on Tesla, by the way. If it loses 30-60 in the overnight, it's quite bad. Hey guys, I think it's a bubble. No shit. Yeah, I don't think it took being a stock god to figure that one out. Anyway, that's it for the day. Thank you all so much for tuning in. I will see you tomorrow. Have a great night, everybody. Later.